Hi everyone, Sean here, and what a week it's been. First up, if you're wondering why rents in the Big Apple are skyrocketing, well, look no further. The New York City short-term rental market is on fire with no predictable end in sight. Demand for New York City rentals is so strong that local renters are becoming landlords themselves through short-term listing sites like Airbnb and Expedia's higher-end VRBO service. Listings from these sites have now outpaced the number of available traditional apartments in New York City by a factor of 3. And yes, you heard that right. 75% of all listings across the 5 boroughs are offered through shared lodging services, resulting in 22,000 short-term stay units compared to 7,500 traditional apartment listings. With New York's long-term apartment rents approaching never-before-seen levels, our guess is that increasingly cash-strapped renters are trying their hand in the short-term micro-hospitality market to augment their monthly cash flow and soften that rental burden. But of course, that's just our professional hunch. Up next, fresh off the heels of the Airbnb bull market comes new data this week showing that New York City was responsible for an astounding 15% of all residential leases signed nationwide. And yes, I did say nationwide. For every 100 apartment rentals closed on throughout the entire United States, more than 1/10 of them were logged in the 5 boroughs of New York City, presumably by anxious renters concerned that if they continue to hold out for a better deal, we'll only see higher asking rents in the future, as has been the unexpected norm over the last calendar year. Last but not least, publicly traded crypto companies are not the only ones taking a beating from the volatile state of the markets this week. Signature Bank, one of the few real estate lenders actually willing to touch crypto with a 10-foot pole, took a 7% dive in their stock price on Monday, closing the day at just below $187 mark and ending the trading week at around the same price. Signature is one of the few well-known lenders willing to accept Bitcoin as collateral for issued debt. In fact, Signature is holding a single Bitcoin loan worth $100 million and is currently servicing $20 billion worth of deposits from crypto customers. And market experts agree that it's this exposure to tech innovation that boosted Signature to a record $375 a share as recently as January, before market turmoil stepped in to unravel not only equity, but crypto gains as well, and has left us all licking our wounds. This is Sean Black signing off from New York, and we'll see you next week on What a Week.